All right, good evening, peoples. Bruce with Targeted Wealth Creation back at you. So, the purpose of this video is twofold. There are some new, what I call pending, very close funds coming. And just a reminder, I didn't do a video on it, but I think some other people are aware of the list. But I wanted to update and explain. Then there's some new funds that Yieldmax has applied for that's really a new category. And I think they're trying to address some likely issues that they've encountered that we as customers have encountered. So I'm just going to do these together so that it's a 15 or 20-minute video instead of doing a 5 to 7-minute video on each of these. So they're lumped together, but they're completely different, peoples. So let me jump in. All right, so over here I'm saying single stock income ETF. Notice it's a single stock. This latter category is not. So these were applied for, the best I can tell, around May 22. So I just did one on Granite shares. So everybody that applies to the SEC goes through roughly a 75-day negotiation. Whether you simply submit it, the SEC reviews it, doesn't have any questions because you've done it 20 times and you've gotten really good at it, and you get approved, okay? I don't know if they shorten the cycle, but I know it can be up to 75 days. So you typically, sometimes when they submit it and you see it launched, there's a 90-day window. But as I mentioned in my other video, these funds apply all the time to the SEC. And then even if they get approved, they may decide that the market's not ready, they're going to do it later, or they change their mind and they don't even want to do it because, as we all know, 90 days is a long time in the life of the stock market, an ETF, et cetera, et cetera. So let's jump in here, and what you'll see is this is the list, right? I think it's 12 stocks, 3, 6, 9, 12. So they submitted these back around May 22, May 24, and we saw 8, 7, right? May, June, July, August. So that 75-day window seemed appropriate, and they've launched one of them. Well, does that mean they launch them in the order, or they're not going to launch any of the others? Remains to be seen, peoples. So I'm going to go over them. So BABA is the actual symbol on the stock market for Alibaba. What does Alibaba do? Okay. Alibaba is one of the world's largest, if not the largest, wholesale marketplace, as opposed to Amazon being a retail marketplace. Okay? And it's Chinese. So when the Chinese roll something out and have 2 billion people, you can expect that it is easily going to be the largest. So I apologize here. BABO is the underlying stock for Alibaba. Obviously, the description fits. Yieldmax is symbol is BABA. And anybody that watches it, you know that launched on 8/7, which is just a little over a week ago. So let's jump into any of these others could come at any time. Just depends on what Yieldmax wants to do. So we have Carvana. And for those of you that watch Ulti and have seen me, other YouTubers go into the holdings of Ulti, then a lot of these companies have been in and out of the holdings of Ulti, which means they typically are higher IV. I would say some are good stocks. I'd say some are not so good, but they're all large. They fit the requirements of writing a lot of contracts on the options, et cetera, et cetera. So obviously over here, the only one that's been launched is BABA for Yieldmax, right? And then not yet known on all the others. So Carvana, what is Carvana? Well, those of you listen to my ulti, they buy and finance used cars, one of the largest used cars, and the company's really grown up and done quite well. Highly volatile stock, right? Ulti owns it at times. DraftKings, you can't be a sports bettor or a sports nut and not know about DraftKings. Okay. So it's a whole ecosphere of people that are in fantasy football and want to track their leagues and all that. But also, you just want to go out and bet on your favorite team, right? So they do a lot of things around sports betting and sports watching. Okay. So I don't need to keep telling you which symbol is which. Actually, I reversed these, right? In this case. Oh, yeah, I did that. Guys, just punch these symbols in because I'm already seeing that I'm making mistakes, right? And I don't want to drag these and fix them on your time. So Carvani is the symbol over here, right? And Carvana is the underlying. And I don't want to take your time up of doing that. So I apologize and I'll point it out. Same thing with this one. Now I got it right, actually. So let me do it real quick. It looks like that's the only one. DKNG, I can't really remember, but you guys can find it. All right. So it looks like the rest are okay. Yep, that I got them. I just was copying, pasting, doing different things. All right, let's keep going. Hui. What is Hui? Well, Hui is based on Robinhood. Some of you use the retail brokerage, right? Many people do. So what is the actual symbol? It's Hood. So what is it? It's a retail stock brokerage. Some people really like it because their margin rates are low. Oh, I don't have my view on to fix this. Sorry about that, guys. So let's see if once I get guide, oops, I need something else. I want to fix a typo. It drives me nuts when I see that. I'm a very fast typer and never learned the right fingers. So there's so many times that I hit keys quickly with a few fingers and make a typo, even though I know how to spell the words. All right. So Robinhood, JDY, JD.com, again, a large Chinese e-commerce company. All right. So the other one is Maro. Okay. And I do have these. They must not be able to get Mari. So Mara is the symbol. Again, something Ulti buys a fair amount, right? Bitcoin miner and sort of energy efficient company. So they're playing off the energy efficiency, but clearly they mine crypto. All right, PDDY would be the Yieldmax. PDD Holdings, a multinational portfolio of e-commerce companies, right? So they're there for companies for funding, helping, all kinds of things. So they own a plethora of e-commerce oriented companies. So Pulte, PLTY, is actually my favorite software company in the world. And I've said it many times. I think this will grow into the, if not the largest software company in the world, one of the top three. I see them very easily in time. It may take 5 years, passing up something like NVIDIA. Why? Because they do software. NVIDIA does hardware. I know they got CUDA, they got some, GPU optimization things, but they're not an ontology. They're not all about large language models for actually implementing AI. You need the hardware to do all the fast processing, but you need the software all throughout your organization to turn the efficiency of all of that intelligence and super fast processing into workflows. And the leader by far is Palantir. They're already in the government. They got started there for, you're talking about the Army or the Navy. How do I deploy millions of people and make sure I have the equipment and what are all the logistics and what are the order? You know, take a small company like AARP that communicates with all older retired people, which I could relate to that. So they just redo workflows. Things that took a company 2 weeks to get done could be done literally in a few hours. So it's taking the idea of AI and then speeding up all of the processes in an organization. So that's why I like them. Robly, based on Roblox. Can't even say it right now, people. Sorry. Roblox, gaming platform. This thing I taught when I first retired. I was really bored and I thought, I want to give back. I was always good in math. It came easy for me. And I went out to the online company. I was teaching math just to keep my brain going. And I tell you, I had some really inner city schools and poor kids and just, you know, there were fifth graders that only knew first grade math. You talk about challenges, and all they wanted to do was erase my whiteboard. And, you know, so not only did I have to learn teaching, which I already knew math cold, but a disinterested student. I had to discipline. I had to call their teacher who sent notes home with the parents and blah, 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 blah. But anyway, what did I finally do? I figured out what these kids liked and I talked to them. So I can tell you, and if you have kids, you already know this, how popular this was with kids. And I'm talking, you know, third grade, fourth grade, fifth grade, many grades, and they have all ages now. So very popular because you know, I don't care what I know about math if I can't relate to what that kid likes and say, hey, I wish I was here and we were both playing Roblox, but it can't. Right now, we got to do math. So why don't we, you know, and relating, you figure out how to relate to kids. I don't care what you're doing. If you're coaching football, you better relate to that kid. Okay, so Shopify, Shoei, right? E-commerce for online stores. Anybody that's anybody, I think everybody knows what Shopify is. It's this giant e-commerce site for people that want to do their online store. Well, I don't know how to build a website. Well, you go on Shopify and they kind of do everything for you, more or less. And you pay, but they help you. So great, great site. Super microcomputer. This is a bit like NVIDIA. And the reason I say that is the founder. Okay, and what do? Well, they make high performance servers and software. They're right there in Silicon Valley. So sometimes when you're over talking to a big tech company, you're talking to an Oracle or a Microsoft or somebody like that, and they need all this equipment. Maybe they want it just slightly customized, right? So you want high performance and everything. So Super Microcomputer operates in Silicon Valley, and the founder is a Taiwanese man who still has, obviously, educated in the US in some of his advanced degrees, a very, very smart gentleman, and not unlike the CEO of NVIDIA, and very hardworking, but has a brother right there with all of the companies in Taiwan that are making a lot of the hardware. So he's spot on. He'll go over and have a meeting, call his brother in Taiwan and say, well, yeah, we can build that. We don't have that. We have this, but we can do that. And does a conference call. And so that company, just anybody who's seen their stock, I mean, I've seen it go to 1,000, back to 700, 400. I mean, it's been one of the highest IV companies there are, implied volatility companies there are. I love it in general. I have some friends that I used to work with that are there. They're either at Advanced, you know, AWS, the software arm for outsourcing, you know, cloud services. Some of them are at Supermicro. So just, you know, NVIDIA, they're all still that are still working or in that tech industry, mostly working for the big software, hardware type companies. And then the final company is Taiwan Semi. Well, if you know anything about Taiwan Semi owns 68% of all advanced chips. They're a critical company, and I think that's what scares the U.S. about China trying to take them over and, you know, all of that potential conflict. Taiwan Semi is just amazing. They're a fab and manufacturer, and all of your big companies, NVIDIA, AMD, they all use some of their underlying chips. Now, NVIDIA does some custom chips, but where that 68% of all advanced chips turns into 90% of all advanced chips is when you talk about AI-oriented chips. So these guys are a behemoth. I mean, the US government's throwing a lot of money in Intel, and we're trying to get our own chip manufacturing to be fantastic, but nobody is going to catch up soon to Taiwan Semi. So very critical company. There are some other big players out there in specialized chips and Broadcom, and I could go through and name a whole bunch, but I won't bore you with that. All right. So the last category I got for you. So guys, those are coming. I personally, I love Palantir. So I may put a little bit into a Yieldmax and then play the rest myself. Because again, you guys know from my videos, I get frustrated with being capped and the way they play these funds. So the old saying is, if you don't like it, go somewhere else or do it yourself, okay? Well, it was hard when MSTR was, 1,800. Now it would be 180, and it's actually only trading at what, 131 now? Yeah, 133, I think it closed on Friday. Because I just sold some 130 and a half calls for the week and got called out, which is exactly what I wanted. All right, so that whole diatribe right there was to lead into this next. And to me, this is the new and most important thing. I think it's a realization that Yieldmax is stumbling a little bit. Add that up with the video I'm about to do coming next. What do I see in the markets over the next 90 days? And they're going to realize, whoop, another typo, another fast typing, STO. Sorry, peoples. Okay, so Yieldmax has applied, we see that on the SEC, but we don't know the fund names and we don't know exactly what they're using, but I put my thoughts in this and telling you what I think they're doing. So the biggest complaint now, and I cover it at a detail level because I'm doing what they actually do all week long in 6 funds. And I've gotten to where it's hard for me to even report on it at the end of the week. I'm just so upset and frustrated with Yieldmax, right? Because I knew what was going to happen, and it happened. And after that does it 3 times, you're frustrated. But I'm not here to beat up Yieldmax. Yieldmax is, and I heard a little rumor they were considering maybe using spreads, option spread. So I'm going to explain that briefly to you. But let's tell you what they're targeting. They're targeting 6 new income funds. Now, guys, these can't even come out for another 75 days. So the ones in the top pretty much can come out anytime, and they may pick a few. Okay, so this new category of incomes from Yieldmax is targeted at 12% income. So right away, if you're doing 100%, you better expect some NAV reduction. I can live with that. I could live with a 20% NAV reduction as long as I got 100% annualized. That's great. But I can't live with 90% reduction, NAV reduction, on 100% return, even though it's a 10% return, because that NAV is going to get so small that it's going to reverse split. And then what happens is the price is so small, okay, you can't, people say, well, yeah, but Bruce, what if you got 100% return and you own the whole thing? Well, yeah, but if it's a $6 stock and it hasn't been reverse split, when it was a $20 stock and it was yielding 80%, that's a lot more money than a $6 stock yielding 80%. Okay? And then I'm losing my share count really when it goes back up big again, right? Because it's a reverse split. All right, guys. So they're targeting ETFs. If they target ETFs as the underlying, then they don't have to do a synthetic long to participate in the upside. And the problem with the single stock funds is they participate in the synthetic long, and they try to collect a little income in the weekly short. They call it a covered call strategy, but I'm calling it what it is. It's a naked or short call. And it only works up to the percentage out of the money that they wrote it. And then after that, it eats all your profits over on the long call. So when it's bad, it's really bad. And when it's good, it's pretty good. If you go up 3% and you wrote the call at 3.5%, then you gain on the synthetic the full 3%, and you gain on the call that didn't go bad. Okay. So what you have here is new strategies. So they don't have to do synthetics. They don't have to use options only. Okay, so what I think they're going to do is I think they're going to do what's called a long call spread. It's not a long call spread. It's called a bull spread. And what is a spread? It's where you write a lower call and a higher call. I'm not going to get into the technicals and do that. I want to make this quick. But bottom line, you're only at risk in writing call spreads is the amount of money that you paid. Remember how many times I said we ran by it and we collected 10 million when we wrote it, but when it went bad, we had to buy it back for 30. That can't happen in a call spread. Absolutely can't happen. But you also stand to gain, but you're limited in what your gain is. So you know what your most gain is, and the most loss is what you paid for the calls. And sometimes by writing one and another, your cost is fairly small. So they'll figure out some kind of strategy. I think that's why they're trying to say 12% yield. Okay. So I think they may, in fact, just buy these and own them a certain amount, right? If it's a semiconductor, let's say, and they chose SHM, or I think it's SMH, guys. Let me check that. Another typo, I think. I think the big semiconductor index is SMH. Yep, somebody was going to tell me on that, but I caught it with my eye. All right, so there's SOX-Q, SOX, and SMH. What I did is saying, I don't know. I didn't scrutinize the SEC document that much. I don't know if they're required to give the exact underlying. They're just saying we're going to base this on an ETF that has a lot of options on it with volume, and clearly the ones I'm listing in all these categories do. So they're going to pick a ETF on that category, semiconductor, right? Whoops, another DUCT. Sorry, guys. Okay. Semiconductor income ETF. So these are known, guys. There's various ones out there, so they don't have to have it. They'll go out, and then if they do these call spreads, they're going to make less income, but they may target 12% and pay more than that, or they use it to offset any NAV. Because remember, SMH goes up and down with the market, right? But you have a lot more ability when you have money in there. If they make 30%, in a month, and they only pay you 12, they can use that other 18% as a return on capital or something. So there's all kinds of things, but what they're trying to say is we want something that participates in the upside and doesn't get killed by our weekly option strategy, which it wouldn't with spreads. All right. So what did I do? I went to the biotech. These are the 6 categories. And I listed some of the big biotechs, right? You notice that I doubt that they're going to use the leverage. If you look at LABU, LABU, that's 3 times a biotech index. I don't think they're going to want to use that to target 12%. Again, I don't know. So I didn't list the leverage ones. I tend to just list the main ones. All right, guys. So you got energy, another opportunity, right? Real estate, tech and innovation, and big 50 income ETFs. In other words, 50 of the largest, tech companies or 50 of the biggest companies. It's unclear what their meaning is. But guys, so they could be using spread options. I think that's exactly what they are doing. But let's see. Again, I had heard a rumor that there may be some coming. So let's see if this is where they're doing. Like I said, I could scrutinize that SEC, but have you ever tried to go out there and scrutinize the dog? Oh my God, you're going to read the smallest print in forever. No, thank you. All right, so a couple comments. I mean, when I found Yieldmax at the end of 2023 and started buying some, I was already in PBR and PBRA, which are two big energy companies. First off, I was bullish on energy, and I'm still bullish on energy. But I think if we have a recession, which I think we're already possibly in, and it could get worse, September and October is going to tell us how the market reacts. And right now, I'm saying it's down. So, and if I'm bullish on oil, I don't want to own anything during that time because most thing being called stocks are going down. But regardless, I just wanted to give you a comment here. PBR and PBRA, I was in them where they were yielding 45% annually. And I was getting a little bit of stock appreciation, not a lot. And because they were selling off it's Brazil's largest state-run oil company. A lot of people hated it because the president had gone to prison before in a car wash call. That was the name of the scandal. And he's back in. He was left-leaning, and some people said communist, others just said no, socialist. And there was a lot of uproar. The truth is, so far, PBR has been fine. But I got out of it with typically 15% annualized. That was the lowest I ever encountered, and I was getting stock appreciation. So I said, oh, I want a lot larger in Yieldmax, and I was for quite a while, but I've since soured on more of them. It's so important on which funds you pick and reading the tea leaves in the market, because if the market's going down 10, 15% on the indexes in any month or two, do you want to own anything in there? Well, some of you guys are going to say, Bruce, they got inverse funds. Well, you know what happens to inverse funds when the stock drops rapidly? They get capped. You got the same problem, right? So inverse funds are good to offset your bull fund, but man, what you want is 1% down, a 2% down in a week. You don't want a 10% down in a week and be in an inverse fund because you're massively capped. Now that's better than just massively going down in a bull fund, right? But in a bull fund going down, you're also going to get some income, right? You're going to win those weeklies every time. It's just your NAV's going to go down. So that's, for me, I'm just throwing out things out there. If they got a 12% fund here and I can participate in the upside, I can go down here and get 12%, 15%. Sorry, guys, I was trying to type something in my second monitor to show you something, and it affected that. All right, I'm going to wrap this up. Yeah, it's back to 15. I was just did a quote on PBR. They're showing it at 15.32%. And I can verify that these funds, now, they pick quarterly. Some of you don't want to wait for the quarterly. So anyway, that wraps up everything. I'm going to get done for you guys on this. That's my story here. Interesting, and what I give Yieldmax credit. They must feel the heat. They must hear a few of us YouTubers. They must hear from some of you just writing to them, right, that have nothing to do with us YouTubers. So anyway, and based on what I see, don't look out for my next video It may not be there till, Monday morning sometime, but you're going to want to see it because I'm going to lay out where I see things going over the next 90 days. Okay, people, have a good one. Again, this is not financial advice. I'm not a financial advisor. This is for fun and entertainment. See you.